Traders, good morning. Good morning. How are you doing today? How has been trading? Hope it's been profitable. What pairs are you considering trading today? Please drop it in the comment section so that we can look at it together. What pair are you considering trading today? Drop it in the comment section if you have any question. Also, please drop it in the comment section. You're welcome to today's live stream. So let's start with the calendar. Let's see what's on the calendar. So today is on 2nd July, and we're expecting major news from the United States by 2:30 and by 3 p.m. Fed Chair Powell will speak by 2:30, and Joe's job opening will be released by 3 p.m. So the previous was 8.06, and the forecast is 7.96. Though they are expecting a decrease, right? That's the expectation. So we wait for the actual. If actual is higher than forecast, that will be good for the dollar. If it is less than the forecast, that will be negative for the dollar. And technically, GBP USD is bearish. Technically, GBP USD is bearish technically, but we could see a pullback, okay, on GBP USD. If you check my status, I posted that on GBP USD is set for buy, okay. So that's it for fundamentals for the day. Let's go to the chart. So I will start with GBP USD. If there's any pair you want me to analyze, please drop it in the comment section. GBP USD. Okay, so let me delete all these lines. Believe you all can hear me. I believe you all can hear me. So you can see on GBP USD at the moment is at a discount level. If we apply our Fibonacci from this swing low to this swing high, okay, you can see GBP USD is at a discount level right now. So today, good morning, Mr. Ludu. Today, I'm considering buying GBP USD. Okay, I'm considering buying GBP USD as it is right now. GBP USD is set for buy, going by the pattern we have on the 1 hour time frame. Let's see what's happening on 15 minutes. So on 15 minutes also, you can see, okay, so this is a buy setup on here. We had a clear on liquidity. You can see this bearish move was to clear liquidity at this previous low, and after liquidity got cleared, let's see what's happening on 5 minutes. Okay, liquidity has been cleared. We could wait for this structure to be cleared. Okay, wait for the structure to be cleared and wait for pullback to, you can see a fair value gap was created here. Can you see this? Okay, we had a fair value gap here, so it's likely if you want to buy, I would suggest you wait for price to pull back and fill this fair value gap before you buy. It's either price goes up to clear to break structure here. Okay, it's either price goes up to break structure here and pull back to fill this fair value gap, or pulls back to fill this fair value gap before going bullish. So if it comes back to fill this fair value gap before going bullish, you could set your first TP. Your first TP could be at this level. I hope you're getting me. Your first TP could be at this level, okay? If it pulls back to fill this fair value gap before going bullish, or it comes to break structure here, then pulls back to this area, that is when you should consider buying GBP USD. That's what is likely going to play out before the news is released or after the news is released. That's my expectation on GBP USD. Though my bias for the week is bearish. Mr. Anaya, I can see you. Good morning. Though my bias for GBP USD this week is bearish, I am considering buying GBP USD based on the price action on 1 hour, 4 hour, and 15 minutes time frame. So my bias for GBP USD today is buy. Okay, I hope that is clear. If you have any question, any pair you want me to analyze, please drop it in the comment section. Let's see what's happening. Let's see daily. Let's see how yesterday candle closed. Yesterday candle closed strongly bearish. Now it looks like a shooting star, right? As you can see, what they did yesterday was to clear liquidity at this previous high. You can see after they cleared liquidity at this previous high, what happened? There was a strong rejection. Yesterday was Monday. Okay, so there was a strong rejection from that level, and we had the resistance here too. You can see that's the reason for the rejection we saw yesterday in the market, and they had to push price down, and they also cleared liquidity at this area. You can see, and if we go down to 4 hour, let's see the pattern that we have on 4 hour right now. You can see the previous 4 hour candle. This is confirmed. Remember the strategy, our rules. After liquidity has been cleared, the next thing we look out for is the candlestick pattern that forms on maybe 4 hour or 1 hour time frame. If the candlestick pattern is a bullish reversal pattern, then we should consider buying. And as you can see, the previous 4 hour candle closed bearish. This looks like an hammer, right? This looks like an hammer. This is a bearish hammer, and after the formation of an hammer, or some people will call this a spinning bottom, it's okay, but I would call this an hammer because the wick below it is 2 times the body, so I would call this an hammer. So after the formation of a bearish hammer, you know you have to wait for the next candlestick to close bullish before you buy. So if this current candle closes by, this will close by 2 p.m. Nigerian time. If it closes bullish, then you want to consider buying GBP USD. Now, if you don't want to wait for this current 4 hour candlestick to close before you buy, because waiting for this 4 hour candlestick to close before you buy, it's likely by the time it will close, price might have gone far. Price might have gone far, and you enter that trade at that point might require you to take high risk. It will require you to take a very high risk. So if you don't want to wait for the current 4 hour candle to close, what you need to do is go down to the next lower time frame. Okay, you need to go down to the next lower time frame to see how the pattern formed, see how the candle closed on the next lower time frame, which is 1 hour. So if we go down to 1 hour time frame and we are able to identify a bullish reversal pattern on 1 hour time frame, we can take the risk buying GBP USD from the current market price. Are you with me? We can take the risk buying. If after the formation of this hammer on 4 hour time frame, we go down to 1 hour time frame and we can identify a bullish reversal pattern, then the risk is worth taking. So let's go to 1 hour. So you can see the pattern we have on 1 hour. This is a bullish reversal pattern, right? This candle looks like an hammer, right? And after the formation of this hammer, liquidity was cleared at this previous low. After the formation of this hammer, the same thing we are waiting to see on the 4 hour time frame. We already have that on 1 hour time frame. This is an hammer. This is a bullish candlestick. This is a bullish reversal pattern. So that is confirmed on 1 hour time frame. We could just go down to 15 minutes to see if there was a shift in market structure on 15 minutes. Okay. Shift in market structure has not occurred on 15 minutes. Okay, the shift in market structure would occur at this point. If a candle closes above this level, that will be a shift in market structure. And after shift in market structure, wait for price to pull back to this zone. Now, if you want to buy from the current market price, we know after a shift in market structure, there's likely going to pull back. Price is likely going to pull back into this zone. We could decide to buy from the current market price and set our stop loss few pips below this level, maybe 10-15 pips below this level. If you want to take the trade now, if you want to buy GBP USD, your stop loss should be at least 15 pips below the low of this level, so that if price changes structure, okay, and later pulls back, it will not hit your SL. So you should set your SL few pips, 15 pips at least, 15 pips below the low of this candle. I hope that is clear. So that's it for GBP USD. Let's move to the next pair. If there's any pair you want me to analyze, please drop it in the comment section. Next pair we'll be looking at is gold. Let's look at gold. My bias for gold today is bearish. Let's see. Where is gold? Okay, so let's start with the daily time frame. Let's see how yesterday candle closed. Okay, yesterday candle closed looks like a spinning top. As you can see, it's an indecision candle. As you can see. Okay, it's an indecision candle. So let's go down to 4 hour. Okay, we'll look at GJ soon. Okay, let's go to 4 hour. On 4 hour, what's happening on 4 hour? You can see the pattern we have on 4 hour, right? This is a bearish pattern, right? This is a bearish pattern. This is an hanging man, a bearish hanging man. So to me, what I'm seeing here, it's a bearish reversal pattern. So I'm looking for sell on gold. I'm looking for sell on gold. So after the formation of this hanging man, it could be that a fair value gap was created after the formation of this hanging man. So let's go down to lower time frame to identify, to confirm if a fair value gap was created. Let's see 1 hour. So was a fair value gap created? Can you see the fair value gap that was created? A fair value gap was created. Can you see this? A fair value gap was created on 1 hour. This is the fair value gap. If we also go down to, let's go to 15 minutes. Let's see 15 minutes. So on 15 minutes, you can see the fair value gap that was created on 15 minutes. Can you see this? So I think the pullback was to fill this fair value gap, or is to fill this fair value gap that was created. So, and as you can see, that gap has been filled at the moment, right? You can see this gap, this fair value gap that was created has been filled. So I think what we should look out for is a bearish reversal pattern to form inside this gap. We should wait for a bearish reversal pattern, or wait for a bearish candle to close below the low of this gap, which is 2330.22. That's my take on gold. If you are considering selling gold, you should wait for price to close below this level. Or let's see the pattern we have on 5 minutes right now, if it's a bearish reversal pattern. Okay, so you can see on 5 minutes time frame, we already have bearish reversal pattern. This is a bearish reversal pattern on 5 minutes time frame. You can see what played out on 5 minutes. There was a clear on liquidity. Can you see it? Clear on liquidity at these previous highs. Liquidity was cleared, and what pattern formed? A bearish reversal pattern formed inside the gap. So this is a bearish setup, and if you are selling from the current market price, your first target should be this low. This should be your first target for gold. So that's it for gold today. Okay, that's it for gold. You should consider selling, and you could set your TP. Your TP should be at this level, and your stop loss, let me see, let me go back to 4 hour. Your stop loss should be few pips above this level. Probably you could use this high, this previous high. You could use this as your stop loss. Okay, 2338.16. 2338.16. That's about 80 pips risk. 80 pip risk. This is good. So 80 pip is not too much on gold. So your stop loss should be at this previous high. That's my suggestion. If this high gets cleared, if a candle closes above this high, then it is likely gold is going to fill this fair value gap that was created on 4 hour. If that high gets cleared. So if you take this trade and it goes against you, then you should be looking for another opportunity to sell around this zone. I hope you're getting me. Okay, if you sell from the current market price, your stop loss is at this level. If the stop loss gets hit, then you should wait for another good opportunity to sell gold from this zone. And if you are selling from this zone, it's likely going to drop down to fill this fair value gap. So if you are selling, these are your targets. This should be your targets. I hope that is clear. I hope that is clear. I hope that is clear on gold. Any question on gold? Any question on gold? Do you have any question on gold? I hope that is clear. So let's move to the next pair. Okay, someone said we should look at GJ. Let's see GJ. Like I told you guys yesterday, GJ is bullish, but we could see price pull back. As you can see, that was what I told you guys yesterday. Price is likely going to pull back. Okay, so where is going to pull back to? It's likely going to pull back to, I think a fair value gap was created here. A fair value gap was created here. You can see. What do you mean? How can you keep tab of your trades? I don't get that question. So you can see a fair value gap was created here. So gold is likely going to, GBP JPY is likely going to pull back to this zone. It's likely going to pull back to this zone before going bullish. So at the moment, with what we have on 4 hour time frame, and let's see how yesterday candle closed. Okay, so yesterday candle closed bullish. Okay, looks like a spinning top. So after the close of the bullish candle, let's see the pattern that formed on 4 hour. So on 4 hour, you can see what we had on 4 hour yesterday is a bearish reversal pattern. After the close of the candle that looks like a spinning top on daily time frame, what we had was a bearish reversal pattern on the 4-hour time frame. So I'm expecting GBP JPY to pull back to this zone before considering buying. Long term, GBP JPY is still bullish, but at the moment, I think it is bearish. It is bearish. I'm to take any trade on GBP JPY right now, it will be a sell, and my target to be at this level. At this level, that's my take on GBP JPY. I hope that is clear. 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 That's my take on GBP JPY. If you are considering buying, let's see H1. If you are considering buying, I'm not seeing a buy setup here, but if you want to risk buying, you should wait for price to break this resistance. If you want to risk buying, you should wait for price to break that resistance. Okay, just know what you're doing. Know what you're doing in the market. If you have a trading plan and you stick to your trading plan, that's the only way to keep tabs to your trade. I hope that answers your question. I hope you have to know what you're doing in the market. Have a trading plan. Have a trading plan and stick to your trading plan. No one will do that for you. Okay, it's your responsibility. Okay, no one will do that for you. Okay, that's it for GBP JPY. Which other pair do you want me? Someone said USD CHF. Let's see USD CHF. I shared with you guys USD CHF is bullish for the week. It is bullish for the week, but let's see what's happening on the chart right now. USD CHF is bullish for the week. Okay, let me go to daily. Okay, so this is it on, like I said, don't jump in and buy USD CHF. Okay, don't jump in and buy USD CHF. Wait for price to pull back to this level before you buy. USD CHF is bullish. Wait for price to pull back to this zone, 8902. 8902. That is about 140 pips. Yeah, from the current market price. Wait for it to pull back. Don't jump in and start buying. As you can see, price has already moved. It has moved. Okay, so it is also possible that price will just go fill this fair value gap. So this is where you should be considering selling. If this gap gets filled, this fair value gap, if it gets filled, okay, you could consider selling from that zone. Okay, you could consider selling from that zone, and you set your tick profit at this area. If price pulls back to this area, you buy. Sell from this zone. Okay, a bearish reversal pattern should form inside this zone before you sell, please. There has to be a bearish reversal pattern. A bearish reversal pattern must form inside this zone before you consider selling. So right now, USD CHF is bullish. It is bullish. It's likely going to fill this fair value gap before going bearish. And if you are considering buying, this should be your area for buy. This area should be the area you should consider buying. If you buy from the current market price, you'll be taking a very high risk, which I don't recommend. I don't recommend you taking this kind of risk. It's too high. If you are buying from this point and your target is here, look at the risk reward. That's a very poor risk reward, and that I would not recommend or suggest that you take. Okay. Any other question? Any other question? Any other pair? Any question? Any other pair you want me to analyze? Please let me know. Let me know. I believe you guys can hear me. You can hear me, right? Okay. Which other pair? Which other pair? Okay, let's look at Euro Aussie. I expect Euro Aussie this week to be bullish. Okay, this is the daily time frame. You can see the pattern we have here. This is a bullish reversal pattern. It formed at this point, a bullish reversal pattern. And what happened here? You can see, I think last week, liquidity was cleared at this previous low. Liquidity has been cleared. After liquidity has been cleared, we wait for a shift in market structure. Let's see what's happening on 4-hour. So on 4-hour, I think there was a shift here. There was a break of structure. Okay, so it's a break of structure here. So you should wait for price to pull back. Okay, wait for price to pull back to this area. Wait for price to pull back to this area, which is a discount area. We have a fair value gap here. Okay, that's my take on Euro Aussie. Wait for price to pull back at least to this level before you consider buying. You could apply your Fibonacci wait for price to pull back to discount. Okay, apply your Fibonacci from this swing low to swing high. Okay, wait for price to pull back to a discount level before you buy. I hope that is clear. I hope that is clear. So you could also take advantage of the bearish setup. Going by what we have on, this is 4-hour time frame. Am I right? Okay, this is 4-hour time frame. You can see the pattern we have here. This is an engulfing pattern, a shooting star candle, an engulfing candle. This is this is an engulfing pattern. This is a sell setup. And since we are expecting price to pull back to a discount, one could take advantage of this bearish move. So if you are selling from the current market price, your TP should be at this level. But I think price has already moved. Price has already moved. So I would suggest you wait for a pullback if you want to sell. Wait for a pullback. Let's see what's happening on 1-hour time frame. Wait for a pullback. Okay, you could wait for a pullback. As you can see, a fair value gap has been created here. You can see this fair value gap. So you could wait for price to fill that fair value gap before you go bearish. Wait for a pullback. Euro Aussie is bearish at the moment, but personally, I would wait for price to pull back at least a 50% retracement of this move before I would go bearish on Euro Australian dollar. So I expect to see that happen before the New York session. Okay, before or after New York session. So that's what I'm looking out for on Euro Australian dollar. I hope that is clear. 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 I appreciate you all that have liked the stream. If you're yet to like the stream, please do that now. Do that now. It costs you nothing. If you're getting value from this stream and you want others to also see this video and participate in the live stream, please click on the like button. Click on the like button. And if this is your first time participating, you're welcome. You're welcome. Good to have you in today's session. Please like the stream. Oh, sorry, subscribe. Subscribe to the channel so that anytime I come online, you'll be notified by YouTube. Please do that so that you don't miss any of the classes, any of the sessions. Even if I don't drop it on the social media handles, WhatsApp, Telegram, you'll be notified by YouTube. Okay. Australian dollar USD is positively correlated with GBP USD. So if I've analyzed GBP USD, you can apply same on Australian dollar USD. Similar patterns. Okay, we've done gold. Mr. Emmanuel, did you just join the class? We've looked at gold. Maybe you might have to watch the replay. So let's look at Australian dollar USD. Australian dollar USD. Okay, so long term this week, my bias for Australian dollar USD is bearish. It is bearish. Okay, that's my bias. But I think they might still want to clear this buy side liquidity. They might still want to clear this buy side liquidity before going bearish. But yesterday, you would see that the high of last Friday candle was cleared. Not just the high of last Friday candle. I think the high for last week candle, last week market was cleared yesterday. So liquidity was cleared at that level. And let's see the pattern that formed on 4-hour. So what we had here was a bearish reversal pattern. This is a shooting star. So a bearish reversal pattern formed on the 4-hour time frame. Can you see that? So what am I waiting for? I want to see price pull back. Okay, I want to see price pull back to this area. I want to see price pull back before I will consider selling GBP USD. So based on what we have on 4-hour time frame, I think Australian dollar USD is bullish at the moment, considering the fact that we had a fair value gap was created at this point, and that gap has been filled, and we can see the pattern that has formed inside this fair value gap that was created. Can you see that? You can see the pattern that has formed, and also liquidity was cleared at this previous low. Can you see? Liquidity was cleared at this previous low. So this looks like a buy setup. This is a buy setup as far as I'm concerned. Okay, so if I'm going to take any trade on Australian dollar USD, it will be buy, and my SL will be few pips below the low of this candle, and my target is likely going to be around this area or this area of liquidity. There's a high probability that they would come hunt for liquidity because this is relative equal high. So they might want to come for that level. So this will be my TP, and my stop loss will be few pips below this level. That's my take on Australian dollar USD. Let's see 1 hour time frame. Okay, so clear on liquidity. Let's see on 15 minutes if there's a shift in market structure on 15 minutes. Okay, so that's my take. Shift in market structure should occur at this level. Okay, it should occur at this level. So that level has not been broken. So if a candlestick closes above that level, you might want to wait for price to pull back. Okay, to pull back to fill this fair value gap that was created, though it has been filled before. So they might still want to come back and wait for shifting market structure. They might still want to push price down to come and fill this gap again, test this level again before going bullish. So after the shift in market structure, you could patiently wait for price to pull back and fill this gap again, test this level again before you go bullish. Okay, but if you don't want to wait for price to pull back after the shift in market structure, you can decide to buy, set your stop loss 10-15 pips below this level, because trading is a game of probability. It's not guaranteed that price will pull back to this zone, and if it doesn't pull back, you would miss that move. The only advantage is that when you wait for price to pull back and it happens, your risk on the trade will be less. Your risk on the trade will be less. So in this case, what I do is, okay, if after the shift in market structure I executed buy trade, I set my stop loss 15-20 pips below this level. If price pulls back to test this zone and there's a rejection from that level, price decides to pull back from that level, then I can now adjust my stop loss to this level. Are you with me? Instead of me missing the trade, I would go in after the shifting market structure, set my stop loss few pips below this level. Let's see if price will pull back to this zone. If it pulls back, it's okay. My stop loss is far below this level, so I have nothing to worry about. And if there's a strong rejection from that level, I can now adjust my SL to this level. But initially, my stop loss will be far from this low. I hope that is clear. That's my take on Australian dollar USD. I hope that is clear. 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 So that'll be all for today's session. I appreciate you all for your participation, and I look forward to having you in tomorrow's session, same time. Do have a wonderful day.